Hello and welcome again to our channel. What if I told you that the way we store data, exchange value, and build trust is changing forever? Welcome to the world of blockchain and cryptocurrency. In this video, we'll break down what blockchain is and why it matters, how decentralization is transforming finance and technology, digital ledgers and crypto wallets, how transactions actually work, mining, proof of work, and proof of stake explained, the future of blockchain and why you should care. Stay till the end, because we'll also answer the big question: is crypto just hype, or is it here to stay? Let's get started. What is blockchain? Imagine a massive book that keeps records of every transaction ever made. Every page in this book is called a block, and once it's full, it gets sealed and linked to the previous page, forming a continuous chain. This is what we call a blockchain. Key features of blockchain: decentralized, no single company or government controls it. Immutable, once data is recorded, it cannot be changed, preventing fraud and corruption. Transparent, anyone can verify transactions, making it trustless, meaning you don't need to trust a third party. Real-world example. Think about banks. When you transfer money, the bank keeps a record in their system. But what if the bank is hacked? What if they manipulate records? With blockchain, the record is stored across thousands of computers worldwide, making it almost impossible to hack or alter. Decentralization, the game changer. Traditional systems, like banks or governments, are centralized, meaning one authority controls everything. But blockchain is decentralized. Power is spread across thousands of computers, nodes, instead of a single entity. Centralized system, banking. Bank verifies and controls all transactions. Can freeze your account or restrict access. Prone to hacking or corruption. Decentralized system, blockchain. No single authority controls transactions. Users have full control over their assets. Highly secure and transparent. For an example, if you use a bank, they can reject your transaction or limit withdrawals. With Bitcoin or other cryptos, you are the bank. No one can stop or control your transactions. How does blockchain work? Let's break down how blockchain works in simple steps. Step 1. A transaction is created. Example, you send 1 Bitcoin to your friend Alex. Step 2. The transaction is broadcasted to a network of computers, that is nodes. Example, thousands of computers worldwide check if you have enough Bitcoin. Step 3. Computers solve complex math problems to verify the transaction, that is mining. Example, miners compete to validate transactions and get rewarded with new Bitcoins. Step 4. The transaction is added to a block. Example, the record of you sending 1 BTC is stored permanently. Step 5. The block is linked to the previous ones, forming a blockchain. Example, this chain of blocks keeps every Bitcoin transaction ever made. This process makes blockchain secure, transparent, and impossible to hack. What is cryptocurrency and how does it work? Cryptocurrency is simply digital money that operates on blockchain. Unlike traditional money, which is controlled by banks, crypto is decentralized and gives you full control over your assets. Popular cryptos and their use cases. Bitcoin, BTC, the first and biggest cryptocurrency, often called digital gold, used for payments and as a store of value. Ethereum, more than just money, it powers smart contracts and decentralized apps, dApps. Stablecoins, USDT, USDC crypto tied to the US dollar, reducing volatility. NFTs and DeFi tokens, digital assets, collectibles, and finance tools built on blockchain. Example, imagine sending $10,000 to someone overseas. A bank takes days, charges high fees, and requires approvals. With crypto, you can send money in seconds, with minimal fees, without any middleman. Why is blockchain and crypto so important? Now, you might be wondering, why does all this matter? Let's compare. Traditional banking versus blockchain. Control. Centralized, banks, governments, versus decentralized, peer-to-peer. Transaction time. 2 to 5 days versus instant, minutes or seconds. Fees. High fees, Middlemen versus low to zero fees. Security. Vulnerable to hacks and fraud versus highly secure and immutable. Access. Restricted by banks and policies versus open to anyone with internet. In countries with unstable economies, people rely on Bitcoin to protect their wealth from inflation. Places like Venezuela, Nigeria, and Turkey have seen massive crypto adoption for this reason. Digital ledgers and crypto wallets. How transactions work. Every blockchain has a digital ledger, a database that stores all transactions. Instead of being stored in one place, this ledger is copied across thousands of computers, making it incredibly secure. How crypto wallets work. A crypto wallet is like a digital bank account that holds your cryptocurrencies. Instead of using a username password, wallets use a public key, like an email address, and a private key, a secret password. Transactions are recorded on the blockchain and cannot be altered once confirmed. Think of a crypto wallet like an email account. You give people your public key to receive funds, but your private key is your secret password. If you lose it, you lose access to your money forever. Proof of work and proof of stake. How transactions are verified. Now, how do we make sure blockchain transactions are real and secure? This is where mining and proof of work comes in. Proof of work. How Bitcoin works. Transactions are verified by computers solving complex math problems. Miners compete to solve the problem first. The winner gets to add the new block and earns rewards, Bitcoin. This process makes it extremely difficult for anyone to cheat the system. Imagine a huge competition where thousands of computers are trying to solve a puzzle. The first one to solve it gets to add the transaction to the blockchain and wins a reward. This is exactly how Bitcoin mining works. Proof of stake, a greener alternative. Instead of mining, users stake their crypto as collateral. Validators are chosen randomly to verify transactions. This method uses less energy and is faster than proof of work. Ethereum shifted from proof of work to proof of stake, making transactions faster and 95% more energy efficient. The future of blockchain and crypto. Blockchain is not just about money, it's transforming industries worldwide. Industries being transformed. Finance. Banks use blockchain for instant settlements. Healthcare. Secure patient records stored on blockchain. Supply chain. Companies like Walmart use blockchain to track food safety. Gaming and metaverse. Digital worlds and NFTs built on blockchain. Voting. Preventing election fraud through transparent digital voting. For an example, imagine applying for a loan, buying a house, or voting in an election, all on a secure blockchain, with no middlemen and no fraud. Is crypto a bubble or the future? Crypto has had big booms and crashes, but is it just hype, or is it here to stay? Why crypto is the future? Governments and institutions are adopting it. More real-world use cases, DeFi, NFTs, CBDCs. Increasing mainstream acceptance. Challenges includes price volatility, government regulations, security risks and scams. Like the internet in the 1990s, crypto is evolving. The question is, are you ready for this revolution? Finally, blockchain and crypto are more than just digital money, they are the foundation of the future internet and financial system. Whether you're an investor, tech enthusiast, or just curious, learning about this technology is your ticket to the future. Tell us in the comments, do you think blockchain will change the world? Like and share this video if you found it helpful. Subscribe for more informative and exciting insights.